Fiat money. Fiat money is currency that a government has declared to be legal tender, but it is not backed by a physical commodity. The value of fiat money is derived from the relationship between supply and demand rather than the value of the material that the money is made of. Historically, most currencies were based on physical commodities, such as gold or silver, but fiat money is based solely on faith. Fiat is the Latin word for "it shall be." In China, fiat money started during the Yuan dynasty, and believed to be the first nation to implement fiat money as currency. It started in 1217, when the Mongols successfully invaded China. In 1236, paper money was issued on a moderate scale. It was known as the first Mongol issue. By 1260, the Mongol note circulation reached a substantial level. The Yuan 1264-1368 dynasty forbid the use of gold and silver as currency and demanded that a certain percentage of taxes be paid using paper money. Excessive printing year after year soon flooded the market with depreciated paper money until the face value of each certificate bore little or no relation to its counterpart in silver. In 1272 a series of new issues were put in circulation at a conversion rate of 5 old notes to 1 new one. This became known as the Second Mongol issue. All these pieces of paper are issued with as much solemnity and authority, as if they were of pure gold or silver, and on every piece a variety of officials, whose duty it is, have to write their names, and to put their seals. And when all is duly prepared, the chief officer deputed by the Khan smears the seal entrusted to him with vermilion, and impresses it on the paper, so that the form of the seal remains printed upon it in red. The money is then authentic. Anyone forging it would be punished with death. In 1309, the third Mongol issue followed the same 5:1 ratio of its predecessors. In an effort to reduce the amount of notes in circulation, the government often refused to exchange new issues for old certificates that had been worn out through use. Around 1350, during the final phase of the Mongol dynasty, huge efforts were made to correct the currency. Paper notes issued by private, provincial and central government agencies had resulted in an explosion in credit and subsequent precipitous fall in its value. In 1374, the new Ming dynasty issued its first paper money, known as Great Ming Precious Notes. These notes were inconvertible to coin, and little effort was made to maintain its value. 6 different issues are known to have occurred during 1368-1426, although it is likely that there were many more. Fiat money in Rome. Although Rome didn't actually have paper money, it provided one of the first examples of true debasement of a currency. The denarius was Rome's currency of its time. It was essentially a coin pure silver at the beginning of the 1st century AD. By AD 54, Emperor Nero had entered the scene and the denarius was approximately 94% silver. By around AD 100, the denarius silver content was down to 85%. Emperors that succeeded Nero liked the idea of devaluing their currency in order to pay the bills, and increase their own wealth. By 218, the denarius was down to 43% silver, and in 244, Emperor Philip the Arab had the silver content drop to 0.05%. Around the time of Rome's collapse, the denarius contained only 0.02% silver. In U.S. Before the introduction of the US dollar into the economy, the first ever paper money issued in the continent of America was called the Continental Currency. It was issued in accordance to the Revolutionary War or Civil War. At the start of the Civil War, the U.S. didn't have a national paper currency. Instead, the money supply consisted of a variety of U.S. coins and paper notes issued by private banks, and because of this, the need for a standard currency came about. The first use of fiat money, United States notes also called greenbacks in the United States, was in 1862. It was used as a tool to pay for the enormous cost of the Civil War. Greenbacks were a debt of the U.S. government, redeemable in gold at a future unspecified date. They were circulated along with gold certificates, backed by the government as promise to pay in gold. Because of this, the US dollar was hard pegged to gold, resulting in domestic price stability and virtually no inflation. Unfortunately, the financial needs of WW1, 1914 to 1925 ended the linkage of gold to the US dollar. In order to pay for WW1, countries had to print an endless supply of paper currency, which by necessity mandated a delinking from gold, because there wasn't enough gold to support the value of paper money. In 1926, the gold exchange standard was established, wherein each country pegged its currency to the US dollar and British pound, which were then supposed to be backed by the dollar. When the Depression began, countries tried to cash in their pounds and dollars for gold. That run on gold forced the end of the gold exchange standard in 1931. Fiat currencies reigned worldwide, leading to huge economic imbalances from country to country, and was of the major contributing factors to the beginning of WW2 in 1939. In 1944, Bretton Woods Accord, similar to gold exchange standard of 1926 to 1931, was established, utilizing two main currencies again, the US dollar and British pound. A run to convert pounds to gold collapsed the pound, and began the end of the Bretton Woods Accord. It took 3 years, while governments tried to salvage the system and also to determine what to do next. In the later half of the 20th century, United States notes became ever less important in the nation as money supply due to policies that shrunk or eliminated linkage of gold and silver to any form of paper currency, though Congress supported their continued circulation. They were increasingly replaced by currency issued by the Federal Reserve System in 1963, which came to look almost identical to the United States note known as the Federal Reserve Note. The Federal Reserve Note thus became the new greenback, with no promise to pay and lawful money was released. No guarantees, no value. In 1966, Congress allowed the Treasury to start removing United States notes from circulation. The last delivery of the notes by the Bureau of Engraving and Printing to the Treasury was made in 1971. In 1994, the Regal Community Development and Regulatory Improvement Act eliminated the issuance of the notes altogether. Today, original greenbacks can be found only in numismatic collections. But as the first federally issued fiat currency, the United States note made possible the bills we still use every day. Checking account, also known as transactional account, demand deposit or current account, is a deposit account held at a bank or other financial institutions that allows for withdrawals and deposits. It supplies frequent access to funds on demand through different channels securely and instantly. Money held in a checking account is very liquid. Therefore, checking account users can withdraw or deposit any amount of money, subject to availability of funds. All financial transactions through checking accounts are listed either via a bank statement or a passbook. Checking accounts users can make or receive payments by ATM cards, debit card, cash, money check and money order, direct debit, electronic funds transfers, gyro, standing order, SWIFT, online banking. Well,